All right, let's talk e.l.f. Beauty. The stock came into its third quarter earnings report under some serious pressure. I mean, investors were really starting to ask some tough questions about whether that incredible growth streak could actually last. So the stage was set for a pretty critical announcement. Let's dive in and see how they answered. And wow, did they ever answer. Sometimes the market's first reaction tells you everything you need to know. The stock just exploded higher in after-hours trading. We're talking a huge jump. This wasn't just some sigh of relief. This was a loud and clear statement from a company firing on all cylinders. So what was behind that huge move? Well, it was the best-case scenario for bulls. A clean, undeniable beat and raise right across the board. When a stock is in the penalty box, you call it a prove-it quarter. Well, e.l.f. didn't just prove it. They pretty much rewrote the entire test. Let's start with the bottom line, with earnings. Wall Street was modeling, about 72 cents in adjusted earnings per share? e.l.f. came in and delivered $1.24. That is a massive 52-cent beat. I mean, that's just a huge number, and it tells you their profitability engine is running hotter than anyone expected. And you see the exact same story on the top line. The consensus estimate was for about $460 million in revenue. They posted nearly $490 million, so they blew past that estimate by almost $30 million. Just another sign of incredible strength. Now, what's really important here is the sheer velocity of this growth. That revenue beat works out to 38% year-over-year growth. Think about that. In an environment where the big fear was that growth was slowing down or normalizing, this number shows the brand has some serious accelerating momentum. It's really impressive. And they didn't stop there. They backed it all up by raising their guidance for the full year, and not by a small amount either. Raising sales, EPS, and EBITDA this aggressively, well, that's management basically telling the market, hey, that huge quarter we just had, that's not a fluke. This is the new baseline. Okay, so the headline numbers are fantastic, but the really crucial question is how they did it. So let's pop the hood and look at the underlying drivers. We're going to get into margins, market share, and a very, very important acquisition. So how'd they pull it off? First off, profitability measured by adjusted EBITDA was just on a tear, up an incredible 79%. Super important here, their gross margins held firm at 71%, which shows they're managing costs really well. They also kept stealing market share, gaining another 130 basis points. But let's be honest, the real kicker here is the Rhode acquisition. It was a monster contributor right out of the gate, adding almost $128 million in sales just this quarter. Now, if you listen to management, they have a very clear story about their success, and it all comes down to one simple theme: consistent, long-term execution. It's a narrative they've been hammering home for a while now. And the CEO, Tarang Amin, he said it perfectly on the call. 28, that's 28 straight quarters of sales growth. This is not a flash in the pan. He's making it clear they see themselves in an elite club of top-tier consumer companies, and they're using that track record as their calling card to investors. So what's their secret sauce? Well, management will point you to these three pillars. First, just an amazing value proposition that consumers love. Second, an innovation machine that makes prestige-level beauty accessible to everyone. And third, they're just masters of disruptive marketing that gets people talking, from a wild partnership with Liquid Death to buying a commercial during the big game. And looking ahead, this is where management sees a huge runway for growth. Right now, international sales are only about 20% of their business. For their big legacy competitors, that number is over 70%. And this is where a brand like Rhode, with its massive global social media presence, becomes an incredible accelerator to help e.l.f. close that gap and close it fast. Now, to really appreciate just how big this quarter was, you have to remember the mood going into the report. Seriously, this wasn't just another earnings call. For a lot of investors, this was the moment of truth for the stock. And here's why. I mean, just look at this chart. In the 3 months leading up to the report, the stock was down almost 35%. At the same time, its sector was up over 15%. That is a massive divergence that tells you there was a lot of fear baked into the share price. And that fear was tied to some really specific concerns. People were worried about tariffs, about the company's heavy reliance on China for manufacturing, about margin pressures, and the big one was this idea that the insane growth in the beauty category was finally slowing down. The company had to answer all of these worries, and boy, with this report, they absolutely did. Okay, so that was a monster quarter that put a lot of fears to rest. So where do we go from here? What's next? Let's switch gears and talk about our forward-looking view and our trade idea heading into the next earnings report. The big question is pretty simple, right? Can this incredible momentum continue? And if so, how do we position ourselves for it? So here's our bull case, laid out step by step. First, we think their new spring product launches are going to keep driving market share gains. Second, we expect them to prove they can hold that critical 71% gross margin line, even with any tariff noise. Third, watch for Rhode's international expansion to continue, with big launches in new markets. And finally, don't forget, they have about $400 million left on their stock buyback plan, which gives them firepower to support the stock and amplify upside. So, putting it all together, the strength of this quarter, the crystal clear strategy, and all the catalysts on the horizon, our rating is outperform. The Prove It quarter is officially in the rearview mirror, and we believe this company is set to continue its really impressive run. And as always, just a reminder, this is not financial advice. All of this analysis is for informational purposes only.